Well, hang out the bunting and 3 cheers for George Osbourne. We're not in recession, or we're not in yet another recession right now, on the basis of figures which may yet be modified. The fact that a growth rate in the first quarter of this year of 0.3% can be treated like the second coming tells you a lot about the state of the British economy. But we shouldn't be too dismissive of small mercies, for there aren't any bigger ones on offer. One for Comrade Mason, I think.
If you're the kind of person that gets annoyed when economic stories start 0 point something, get used to it, because today's 0.3% growth may be small, but it's what we can expect for some time. In real money, it means the UK economy has grown by about £5 billion more in the last 3 months than it did in the 3 months before Christmas, and that's not much, but politically, it is a lot. It saved George Osbourne a lot of trouble. This is what a modern depression looks like. The graph shows the size of the economy, which fell dramatically during the financial crisis of 2008 and has not recovered, despite today's positive figure. If you look at how the economy expanded since 2000, you can see what's lost. This dotted line shows the long-term trend, and the gap between that and where we are is growth that can never come back.
I think it's more politically important than economically important. Anything in the region of minus 0.2 to plus 0.2 would have really just said we were stagnant. Being positive, it's perhaps fractionally better than nothing, but it's really still only about half the growth rate which in the past we would have considered to be normal trend growth. So it's very, very slow indeed.
If you look at the detail, nearly all the growth from January to March came from the service sector, which added 0.5% to GDP, but that was offset by stagnant manufacturing and a still shrinking construction sector, which together with agriculture, also shrinking, subtracted 0.2%, leaving the final figure 0.3. If you could speed construction up, or even just stop it shrinking, you could have a recovery. But that's not what the plan is. When they designed the austerity plan in 2010, the government said really clearly it wouldn't work unless the UK economy rebalanced away from high finance and house prices and towards exports and manufacturing. And today's figures show really clearly that that's not happening. And that's why the political sides of relief were not that big.
These figures are an encouraging sign that the economy is healing, and despite a tough economic situation, we are making progress. But of course, we've still got difficult decisions to take. There aren't easy answers. People understand that. But that's what we've got to do. We've got to go on taking those difficult decisions and confronting those problems if we're going to build an economy fit for the future.
So what can the government do? The UK's top civil servant recently let slip there are too many answers. Vince Cable wants to fix the banks, George Osbourne to fix the construction industry, David Cameron to boost exports, and Nick Clegg to boost the regions.
I think the government recognises that it probably should have spoken more about growth at an earlier stage, and perhaps it should even have pitched its whole strategy, spending cuts and so on, in terms of boosting growth. Now they've reached the stage where they're flailing around, trying a multi-strand approach, 4 different people, pursuing 4 different bases for promoting growth. I don't think that they know very well how it is that they should try to get there, though.
One economist from a think tank has drawn a handy map of all the options being presented to George Osbourne. What is your best guess at when we finally recover as an economy?
I think it's just so hard to say. It really kind of actually depends on what George Osbourne decides to do next, I think. And
what if he does nothing?
If he does nothing, there is a danger that we kind of do end up in this sort of low growth state, bouncing along the bottom.
And on a 0 point something day, the most sobering of all the data was for manufacturing. It, again, grew by a figure we're becoming used to, 0.0.
Well, the Treasury Minister, David Gauke, is here for his routine appointment. When the Chancellor says the economy is healing, by when will it be healed?
Well, it's an encouraging sign that the economy is growing, and that's what we've seen today. But we have got a long way to go because we've got some fundamental problems that we have to address that built up over many years. We're making some progress. We've seen 1.25 million private sector jobs created. We've seen the deficit come down by a third. We've got low interest rates, so there's some encouraging signs, but we've still got a long way to go.
Well, let's have a look at the chart. This is the state of the economy, growth. You call that good, do you?
Well, it's a difficult economic climate, and you know,
that doesn't look like healing. It's like a coma.
Well, we've grown for the first quarter of this year. We're forecast to grow more than France and Germany this year and next year. But Jeremy, we want to be very straightforward. These are difficult economic circumstances. We see the Eurozone in recession. We are recovering from a major banking crisis.
There's a tiny bit of growth.
Deal with
an even smaller bit of growth. A tiny bit of growth. Negative growth, negative growth, negative growth. A bit more growth, negative growth, and a little bit of growth. That is not healing.
Well, we're forecast by the Independent Office of Budget Responsibility to grow this year. We've actually grown more than people had predicted for this first quarter. And as I say, we're creating a lot of jobs in this country. Private sector growth is strong. And we are also getting the deficit down by a third. But you know, if your argument, Jeremy, is that these are difficult economic circumstances and growth is not as strong as we would like it to be, I can't disagree with you.
I'm just taking you up on your leader's view that it's healing. That's all. I was wondering, for example, when we might be back to pre-crash levels.
Well, I'm not here to make predictions. The forecast of the Office of Budget Responsibility,
just as well in light of that graph,
and
because we know what happens.
Well, actually, I think that...
You've no idea what's going on.
The lesson is it's difficult to make
You have
predictions.
no idea what the next set of figures are going to be like, do you?
I'm not making any predictions. No. The Office of Budget Responsibility predicts that we will grow as this year goes on. And it's an encouraging sign, and we shouldn't deny that, but it is in a climate that is difficult for the economy.
Well, your boss has made predictions. I'd just like to remind you of his prediction of how we were going to get out of the mess that we're in. Let's just hear what he had to say in terms of growth strategies.
This is our plan for growth. We want the words made in Britain, created in Britain, designed in Britain, invented in Britain to drive our nation forward. A Britain carried aloft by the march of the makers.
That's absolute rubbish, isn't it?
Well, what's quite striking about the manufacturing numbers...
I think the word you're looking for is yes.
No. What's quite striking about the manufacturing numbers is that if you look at the domestic-facing parts of the economy, in the first quarter of this year, we did quite well, and that's where the services are. If you look at manufacturing, which relies on exports, it's been a really difficult time.
Look, there's another graph there. Contribution of manufacturing to growth of GDP. 0.0, a negative quantity, a little bit of positiveness, negative, negative 0.0.
Yeah.
Now, does that look to you like growth?
No, look, the position on manufacturing is clear. Manufacturing depends to a very large extent upon our export markets. And that has been very, very difficult when the Eurozone has been in recession.
Yes.
It's also just worth pointing out that if you look at the manufacturing numbers, we had a very, very bad January and a bit of a recovery in February and March.
Would you say we were being carried aloft by the march of the makers?
No, we're
not, are we?
We're not, but
no.
That doesn't mean we abandon that process.
It was a pretty silly thing to say.
No. Manufacturing has got to play an important part in our recovery, but it's very difficult when the Eurozone is in the state that it's in, and when our manufacturing is quite so dependent upon that. That's why, for example, we need to do more to export to the likes of China and India, and actually we've seen some quite dramatic increases into our exports into those markets. But we need to do more of that, and that's one of the focuses of the government.
But the strategy hasn't worked. Well, clearly it hasn't worked. You've just said it hasn't worked because things are a bit difficult.
The environment we're in is difficult, and nobody can deny that, and whoever was in government would have to wrestle with some of those problems. But I come back to the point, we have created 1.25 million net new private sector jobs. We have continued to get low interest rates and maintained the credibility of the markets. And we have reduced the deficit by a third. Now, yeah, it would be lovely if everything was rosy and the world economy was growing and going great guns. That isn't the position we're in, and it's difficult for the British people. But the evidence that we saw this morning is that there is some growth and there are some encouraging signs. But, of course, we've got a long way to go.
How does it look in Chorley Wood?
In Chorley Wood, all right. Actually, thank you.
People are happy there, are they?
Well, Chorley Wood's a very happy place.
And people think the economy is getting better and better because your experience is doubtless the same as most people's experience, is that people are very unhappy out there.
There are different...
Some sort of microclimate in Chorley Wood, is there?
It's a very nice place to live, I have to say. But there are different experiences in different parts of the country. I don't deny that. And, yeah, we face some significant challenges. But, you know, the economy is growing. It's forecast to continue to grow. It's forecast to grow faster than in France or in Germany. But we've got huge challenges here, which is why we're taking steps like the Help to Buy process, funding for lending. It's why we're switching expenditure from current to capital to improve our infrastructure. It's why we've got ourselves the most competitive tax system in the G20. That's the direction we're going in. That's why we're looking at the rules and regulations that inhibit businesses from growing. Those are all the steps that a sensible government has to take. What isn't the answer, by the way, and we haven't turned to this, is to going on some spending and borrowing splurge.
No.
And
taking on your own terms.
That would be a huge mistake.
Is it very tiring being so optimistic all the time?
Well, we've got some real challenges, actually. I mean, I think we've been realistic.
But it's healing. It's healing.
Well, on the evidence of today's numbers, it is. And as I say, on the evidence of the 1.25 million new jobs created in the private sector, and the fact that
you've no idea what the figures will be next time around, have you?
Well, those are the figures that we've got at the moment. In difficult circumstances, this is a difficult time for the economy, and we accept that, whether that's in Chorley Wood or elsewhere. But, you know, we are making some difficult decisions at a time when, you know, there are big challenges.
David Gauke, thanks very much.
Thank you.